Quantitative tightening is underway and stocks are falling. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower on the first day of June as the Fed officially begins the reduction of its balance sheet. The central bank is now allowing over $47 billion worth of Treasury and mortgage-backed securities to mature off of its balance sheet each month. And that will increase to a pace of $95 billion per month in 3 months. The Fed expects to shrink its balance sheet, which again is the assets that it owns, those Treasury and mortgage-backed securities, by nearly $1.5 trillion by the end of 2023. That balance sheet did hit a record high of about $9 trillion during the pandemic. The bank says that move could be equivalent to another 75 to 100 basis points of rate hikes on top of the rate hikes they're already doing. And although quantitative tightening is usually a pretty dull process, this round does come at a time of turmoil in the market. And JPMorgan Chase CEO Jamie Dimon says he's preparing for an economic hurricane caused by the Fed as they begin this process. Dimon told analysts and investors at a financial conference in New York today to brace yourself. He cited the Fed's quantitative tightening as a particular concern, saying, quote, "We've never had QT like this, so you're looking at something you could be writing history books on for 50 years. Dimon said central banks don't have a choice but to do this because there's too much liquidity in the system. But JP Morgan is bracing themselves and plans to be very conservative with their own balance sheet moving forward. And a new survey shows traders are feeling pessimistic about the future of the market. The American Association of Individual Investors Sentiment Survey shows optimism about the market over the next 6 months tumbled by more than 6 points this week to 19.8%. That's the fourth time that bullish sentiment has been under 20% in the past 7 weeks. Neutral sentiment did improve by 3 points to 26.7%, while bearish sentiment jumped more than 3 points to 53.5%. And oil prices are continuing to rise today following the EU's agreement to ban Russian oil imports and as Shanghai, China lifts its COVID restrictions. West Texas Intermediate crude futures rising 1.2% to over $116 per barrel, while Brent crude futures are up about 1.3% to over $117 per barrel. Continued supply fears are propping up those prices. And U.S. gas prices also surged to a fresh record again today. AAA showing the national average for a gallon of regular gas jumped nearly 5 cents overnight to over $4.67. And taking a look at the economic data of the day today, U.S. manufacturing activity improved unexpectedly in May. The Institute for Supply Management's Manufacturing Purchase Managers Index rose to 56.1%. Now that was better than expectations for a decline last month. The new orders index rose nearly 2 points to 55.1%, but employment expectations slipped more than a point to 49.6%. And that shows manufacturers are planning to decrease their hiring. Any reading below 50 does signal a decrease. And that plan is prompting fears of stagflation in the economy. This is the first reading under 50 since November of 2020. Meantime, another gauge of manufacturing activity fell to a 4-month low in May. The S&P Global Manufacturing PMI was down more than 2 points last month to 57 as cost soared. Cost increased at the fastest pace since November of 2021 when that inflation gauge hit a record high. And manufacturing optimism also slipped to the lowest level since October of 2020. And meantime, job openings did tumble in April. The Labor Department's Job Openings and Labor Turnover Survey showing the number of available jobs fell by 455,000 to 11.4 million. Job openings in March were revised higher to a record 11.855 million. The gap between openings and available workers fell to 5.46 million in April. And although that is a little bit lower than March, it still shows a major shortage of workers, and that has pushed wages sharply higher, adding to the inflation issues in the U.S. economy. 4.4 million workers quit their jobs in April as the Great Resignation continues, with workers having the upper hand over employers in the current economy. And now more jobs data is coming up. Payroll firm ADP releases its private jobs report for May tomorrow morning. That's expected to show private employers added 299,000 workers last month. The pace of hiring has slowed in recent months as the U.S. economy nears full employment levels. So be sure you're subscribed to my free daily newsletter, Coffee with Greta, to get those details ahead of the open tomorrow morning. And I'll see you all back here for the Wall Report at noon. Give this video a like before you go.